Hello, everybody. Thanks for joining us on this day. And I'll first by answering Thomas's question. We're located in California, so I will refer to California quite a bit, but each state has their own rules and they do vary. So generally, I'll be talking about federal rules. I'll try and integrate comments if I think the state rules will be different. And you can always ask me questions later on in an email or schedule a consultation to discuss those, because we do prepare taxes for clients all over the United States. Okay, very good. Thanks for that question. So I'd like to go over what we're going to cover today. We're going to go over, of course, deductions. That's the main thing. There's going to be a short description of the new PPP round, the second round of bite at the apple. I will go ask some poll questions for you all to get a better idea of who the audience is and tailor my discussion to you. We're going to share some attachments that will help you in the future. I'm going to talk about the big six, which you'll hear about in a moment, regarding financial planning. And of course, we'll remind you to be sure to receive my ebook, which relates to the big six. So let's go over to the PowerPoint presentation. Very good. So first of all, there's not the whole team, but this was taken about a year ago. And the reason we don't have an updated picture is because of COVID, unfortunately. But yes, we have most of the team members there. You can see me in the middle with my business partner, Nancy, and the other team members. There's a little bit of information about me. I have an undergraduate degree from UC Santa Barbara. I have a master's from UC Irvine, an M.B.A. And of course, I have my tax enrollment. I practiced in '87. I'm the owner. This is the big six I was talking about. And before we do this, or right after this, we're going to do a poll question. So the big six is that I wrote an ebook, and it's regarding the ultimate guide to planning your personal finances. And I've determined what I believe are the six most important areas of planning your financial life. And I've determined this over the last 33 years of talking to people and helping my clients address these issues. They are not all tax issues, as you see, so they don't come up all the time in tax interviews, but they're super important in planning your future. So we'll be discussing that a little bit in the near future. So now we're going to go to a poll question. I'm going to bring it up. So first poll question is, what type of entity are you? So if you're an employee of an organization and you're not the owner, go ahead and put in that you are what they are. If they're an S Corp or a C Corp, if you're not sure, you can put that. And I'll wait for a moment while you're answering that. While you're answering that question, I'll give you about 30 seconds to answer. I want you to pay lots of tax. And you don't usually hear that from tax preparers. Why do I want you to pay lots of tax? Because that means you made lots of money or income, right? So do I want you to pay the lowest possible tax according to tax law? Yes. And we want to do that. But bottom line is to create wealth in your life and to do the big six I'm talking about, you have to have net income. You have to have positive. And the more net income you have, the more planning you can do. And yes, the more tax you will owe. So which would you rather? Make $200,000 after expenses and pay $30,000 of taxes? Or would you rather make $1 million after expenses and pay $350,000 of taxes? I know what I would rather have. So keep in mind that preparers are always talking about deductions. We always want to lower tax, but not for the sake. We want to, at the same time, increase income and have lots of net. Okay. So you're still adding in here to your survey, but it looks like most of you are sole proprietors. Some are single member LLCs, which, by the way, is this tax is the same as a sole proprietor. We have some S Corps and some aren't sure. Okay, very good. Okay, we'll get right into the deductions now, because we want to make sure in the next 20 minutes we cover as many as we can. Now, these deductions I'm saying aren't the only deductions. There's lots of deductions. We can't go over the whole code today, but what I'm using is the last 33 years of doing taxes to say, where do I see people miss? Where do they not do enough or they do too low? That's what I'm after here. And do I want to make you a tax preparer? No, I do not. Okay, you either do it yourself or you have a preparer doing your tax return. So this is going to help you if you do it yourself, recognize maybe some new deductions or how to put them in, or it's going to help you engage with your preparer to make sure you're getting all these expenses. So first, Wi-Fi and cable. Now, the reason I bring this up is, yes, some people miss this. Now, I may have a work location, I have a home location. Of course, in the work location and your work expenses, you're going to have the cable and the internet and all the soft type of expenses like that. But remember, at home, you're using it too. So you don't necessarily have to have a home office to take deductions that you're having at home. For instance, Wi-Fi. Now, if you're using the Wi-Fi for other things, you may not want to take 100% of it. Like I write down here is maybe you want to take 75%. But in any case, you want to put it down. Same with cable. Cable, even a smaller percent, because if you're using it for a lot of other things. But if you're looking at ads on cable and you're using cable for other parts, or it's mixed with the Wi-Fi, you can put in the percent. Very good. Technology purchases. Now, I think you all know that if for work you buy a laptop, you're going to deduct it. Or if you buy a cell phone, you're going to deduct it. Or if cell phone charges, you're going to deduct it. Or you buy an iPad, maybe you're going to deduct it. You should, because you're using those things for your business. Now, what happens if my spouse buys a laptop or an iPad? Will any of it be used for your business? Are you going to ask them to access some information or help you once in a while? Yes, probably. Take a percentage of it. If they're helping you with a business a large percentage of the time, take 75%. What about their cell phone? Are they relaying messages? Are you talking to them about business? Maybe a portion of the cell phone. Same, don't forget the accessories. We buy all sorts of accessories these days. It might be ear pods, or it might be other accessories to download, or wires, or the travel drives, all sorts of other accessories. If you're buying them in your business, you'll probably deduct it automatically. If you're buying them personally, they might be used for business. Don't forget to reimburse yourself from the business or take that deduction on your return. So you should be getting 100% for you and then looking for that 25 to 50%. What if you buy a laptop for your child, your teenager? Should you deduct that? Well, maybe a portion, maybe 20, 25%. Because I'm guessing they know more about technology than you do, and they're probably helping you all the time. So you get the idea, expand your thoughts. Don't leave out any idea. If you're working with a preparer, bring it up. They'll tell you what they feel comfortable with and advise you. Hiring children. This is a little known item that people are confused on how to do it. And actually, with sole proprietors, it's the easiest to do it with. Because now, when should I hire my child? Can I hire them at age 2? No, you cannot. 3, 4, 5, 6, we're getting there, 7, 8, probably 9 or 10 years old. They can help you file. How much should I pay them? Well, I'd like you to pay them $12,000 a year if you can give them enough hours at minimum wage. But if you cannot do that, then you would do, most likely with that age, you would do it more like $4,000 a year, something like that, so much $300 a month. And you can do this because they are helping you. You have to have them help you in some way. As they get older, they can help you with technology. Our teenagers all the time help us with technology. And now I pay my child who's 11 years old, $4,000 a year, approximately $350 a month, let's say. Okay. Now I need to do this through payroll. It's very important you do it correctly. So you apply for a payroll number. You can get a work permit from the school. You mark down their hours. You have them do some work for you and you pay them a salary, okay? In the case of a sole proprietor, all you have to do is write the child a check directly because there's no withholdings, no Fed, no state, no Social Security, no Medicare, no SDI, no employer tax, nothing. And that's the same way in California. It might be for other states too, because a sole proprietor paying a children under 18, no requirement. Now, what you've done is you made a deduction for your business. And what about taxing the child? Are we going to have to pay tax for the child? First $12,000 is not taxed in the child's return. So you got a deduction. So if you have 2 children, teenagers, you can do this. Now, do you have to pay them? Yes, you have to give them the money, put it in their account. Well, instead of an allowance, maybe you pay them or have them set it aside in a college account. This is a great way to deduct expenses related to a college in advance because your business is getting the deduction. S Corps can do this too, and C Corps. But they'll withhold Social Security and Medicare and SDI, not federal and state, but those because it doesn't under 18 doesn't qualify in an S Corp or an LLC, a C Corp. Now, if you're a high enough tax bracket, that's about 15%. Those costs are 16%. So if you're in a 30% bracket or 40% bracket, it's still worth doing because it's costing you the Social Security tax 16 and you're saving 30 or 40%. So still may very well worthwhile. And as they get older, pay them closer to the $12,000. Question came up, do they have to have workers' comp on that? You'll have to contact your workers' comp carrier. If you don't have one because you're a sole proprietor, contact your insurance person. Your personal insurance may cover that. Your home policy, the renter's policy, or a landlord, your homeowner's policy. If not, there may be a cost, but I'm guessing it's going to be very small for the workers' comp. Great question. Going that. Someone's asking about a recording of the show, and yes, you just joined. For those who just joined, there is going to be a recording, so you can go back later on, and Asia Blue will help us out with that. That's our host and moderator. We're going to do one more deduction, and then we're going to go to another poll question. Auto expenses, just 2 words, auto expenses, but I got a lot written down in front of me. Auto expenses are a very complicated deduction, but almost every business has them. I'll start off with there's two methods to deduct auto. There's the actual cost method and the cents per mile method. Cents per mile, pretty easy. Total miles, business miles. You take the business miles times about 55 cents a mile. Roughly, it changes every year. So at 10,000 business miles, about $5,500 deduction. It's a very good deduction. Okay. And that's all with the cents per mile. Okay. Actual cost, you do the same thing with mileage. You get the percentage. So it's 5,000 miles out of 10,000 total miles. It's for 50% use. You'd multiply all your actual costs for the year times 50% in the actual cost method. What are the actual costs? Well, things like depreciation of the vehicle when you purchased it over time, depreciation, insurance, repairs, fuel, license. Getting the idea? So a rule of thumb is if you do low miles, but a high percentage, so I only do 5,000 miles a year, but 4,000 of them are business, that's an 80% use. That 80% of all the actual costs are going to be very high. But the cents per mile is not going to be that high. But if you have 25,000, 30,000 miles of business miles, the cents per mile might be better than the actual cost, depending on your percentage use. But generally, the cents per mile will work out when you do higher miles. Depends on the cost of the car and the upkeep and all those things as to whether it's best. Where do people miss out? All of you deduct auto. Mike, I don't need to know this because I deduct auto. Where they miss out is they take too low of a percentage because they're not tracking their miles well enough. They assume it too low, or when they're basically on the cents per mile, they're just not counting them all. They just don't put them down because you have to put total and business. So how do you keep track of them? Yeah, what you're supposed to do, the IRS wants you to, of course, write them down every day. Every day, total miles, business miles, beginning the Eurodometer and the Eurodominator. How many of my clients of those 2,000 do you think are businesses and write down their mileage every day? My guess, a very few percentage of them. But what I do ask them to do, I'd love for them to do that, but it's a lot of work. What I do ask them to do is write down where they're going, what they're doing on a daily basis. If you mark down your appointments, you mark down the things you do in your calendar, you can reconstruct it. You can look at the mileage now and then, and you can get an idea on what mileage you're doing. Because if you get audited, and that's where this all comes from, 33 years of doing this, I've been in plenty of audits representing clients over time, over those 33 years. And I understand what the IRS tolerates and doesn't tolerate. And the bottom line is when you go into that audit, you got to have the log done. If I go in without a log, I'm not getting the deduction. If I go in with a log, good chance I can get that deduction. So you have to give good notes that you can reconstruct that log properly, not make it up, reconstruct it, and you can support the deduction. So I want those deductions to be high. I want the mileage, the business use mileage to be high. So make good notes. And so this is, I'll give you a typical conversation of a new client walks in, does their taxes would be, how much was your mileage? They say, oh, I think it was around, I did around 12,000 miles in my car last year. How much was business? Oh, I think maybe about half. I said, oh, really? What are you doing? They start describing the things they did. I said, okay, it sounds like your regular business to your route, what you do is about half. What about going to the bank? What about going to buy supplies? What about canvassing for commercial real estate brokers? Oh, yeah, I could take that. I didn't know that. And all of a sudden we build it up instead of 50%, we're at 80%. And that can be the difference of many thousands of dollars of deduction. So be very careful and try and keep track of your auto. Okay, next item, we're going to go to a poll question. Before we do that, I'd like to go over to Asia Blue to see if we're on track time-wise and she has anything to tell us.
Yes, we're on time. I just wanted to bring your attention to the button at the top of the screen. You can schedule a consultation with Mike at any time by clicking that button and filling out that form. We will follow up with all of you, but if you want to get first in line, just click that button.
Very good. Thank you very much. All right, we'll go to the second survey question. And that is going to be, there's 3 total. And this one is, what's the gross revenue of your business? And again, if you're an employee, try and estimate the gross revenue of the company you work for. While we're doing that and you're answering that poll question, I want to mention something else. I want to let you know I really enjoy working out. And I'll tell you why at the end of this poll question. But I really enjoy working out. I've been a long distance runner since I was 10 years old. I've done multiple marathons. My longest run was a 100-mile run about 10 years ago. I love triathlons. I've done 3 Ironman. I love Spartan races. I like wakeboarding. I like snowboarding. Like you can't quite see it, the snowboard behind me on the wall, etc. Love sports. And the reason I'm telling you this is Asia Blue is going to introduce you to a YouTube site that we have where I've recorded working out accountant videos, tax tips and financial tips. So when you look at them, you'll know why I'm doing a working out video, because I'm combining 2 things I love, telling people about tax and financial information and working out. So I hope you go there eventually and enjoy them and see some tax tips. They're about other things than we're talking about today. All right. So regarding the survey, it looks to be like most of you are in the 200,000 and under gross revenue range. There are a few in all of the other ranges. There's a few in the 200 to 500, several in 500 to 2 million, several in the 2 million, and a couple of 5 million and up. Now, I always tell people I like the gross revenue being high, but that's not what overly impresses me. What impresses me is the net. Because if I net gross 5 million, I net $100,000. That's a lot of work for $100,000. I'd rather gross 200,000 and net 100. That's a lot less work. But there's that opportunity to get a lot more profit, a higher revenue, of course. There's a lot of potential there. Okay, let's go back to we're going to move a little more quickly through the deductions. All right, next, pension contributions. There are a lot of pension contributions that people can take, and there are different ones for different types of entities. So an IRA, you can have individual IRA, you can have a business SEP IRA. There is a UniK 401k for self-employed people. There is a 401k for companies. There is a UniK for single owner corporations like S Corps. And that's what the UniK. UniK just means 401k for one person. It's also called sometimes a self-K, self-employed 401k. Those are all the same thing. They're not different items. And they're very efficient methods of getting pension aside. There's also the simple IRA. The simple IRA is meant to be, the acronym is SIMPLE, and it stands for something, but it's meant to be simple because it's like a 401k, but you have separate accounts. So there's a lot less administration involved in it. And there's a defined benefit plan. If you ever heard of this, you can get a lot of money in there. You can hundreds of thousands of dollars into a pension plan by using it. It's more complicated. There's more fees to have it. The reason I bring up pension plan is people don't consider them. They might consider them because they don't have the money to put in it, or they think they don't have the money to put in it. But you should be bringing this up your preparer to see, not just to get the deduction. This is part of the big 6 to make sure you build wealth. You're building wealth pre-tax in most of these cases. Sometimes it's a Roth IRA or a Roth 401k, and you're building wealth after tax in that particular case, just like an after-tax investment account. We're going to go to the third poll question and the final one, and that is, if you have employees, how many do you have? So if it's just you, be 0, and you see the other choices there. While you're answering that poll question, I'd like to tell you that Asia Blue said some of the items that we work on for clients: individual, business returns, LLC, S Corp, C Corp, trust, estate, but also we represent clients in IRS audits, also and other types of audits. And we also assist clients with the purchase and sale of businesses. There's lots of other things we do in consulting, but that's what I'm trying to get at. So I would say about half of the people attending have no employees. You're probably sole proprietors. A few have 1 to 10, and a few more, maybe 10% of you are in the 11 to 25 employee range, all small business. Thanks so much for replying to that. Back to the presentation. Asia Blue, is there anything else we would like on time and you'd like to share with us?
Yeah, I provided the link to your YouTube page. Mike, as you mentioned, has a YouTube page where he exercises while providing tax advice. So go ahead and subscribe if you're into that, and yeah, get your free advice there.
Wonderful, thank you. All right, next deduction, home office deduction. Red flag, red flag. People still tell me they think it's a red flag. It is not a red flag. About 10 to 15 years ago, a doctor challenged the IRS and made this not even a yellow flag. I would call it a green flag. I don't think I've seen an audit on this in 10 years, any of my clients. And what happened is the doctor challenged the IRS and said, I can have my workplace where I give medical advice and I keep track of my expenses at home. Do I really have to see people at home? Do I have to do any of that? And he won the case, and it changed home office from there forward. And so it qualifies much more easier because the IRS was challenging it, saying you don't see clients there, we're not going to allow it. All right, now that we know home office is an easy deduction and doesn't do a red flag, we should take it. There is a safe harbor home office, and that really is not a very big deduction. So I would employ you to look at the regular home office deduction. And who can take it? Mainly sole proprietors, partnership members and owners can also take it at their individual level. And then we get to corporations. S Corps can do it, but it's a very special way. You got to talk to your preparer about how to do it. It's not taken at the individual level. It can be done at the corporate level. Now, if I buy a desk at home for my home office, is that a home office expense? It is not. It's a business expense. Home office expense are things that are attached to the house. You improve the house. That's a type of deduction. Or utilities is related to the house. Home mortgage interest, property tax, things like that, upkeep. If you buy knickknacks or things to do your work, it's a direct deduction on the return and not part of the home office, because the home office will take a percentage of those things automatically. We want the whole deduction for that desk. Okay, let me see if I have anything I can tell you on home office deduction. That's really very important. That was it. I just want to tell you that it can be quite substantial. Now, those who don't own their home and rent, it's a free deduction because you can't deduct rent. So you're converting a non-deductible expense into deductible expense. Those who own your home, you're still getting a percentage of utilities and not all the property taxes allowed. So you're getting some of that, and depreciation and repairs and things like that. The home mortgage interest usually can deduct anyways. So that's not a big savings there. Okay, next on the list. Okay, this is not a deduction. This is, I have clients who don't track well enough. I'm going to spend 2 or 3 more minutes, then we're going to probably get to the end so we get some questions in. As you can see, it takes time to go through all these. There's a lot more deductions, so we're going to move in through fast. Tracking expenses. Again, a new client comes in. They say, here's my income and expenses. Please put this in. I said, how did you figure these? Oh, I went through my checkbook and my bank statement, and here they all are. I said, how you know you didn't miss any? Well, I was very careful. So, well, the only way you can be super careful is to put it in a program like QuickBooks and reconcile the bank statement. And that means every entry has to be in there somewhere. So if you do that, that guarantees you're not going to miss something. So people with substantial businesses, I encourage them to use some sort of accounting program, double entry, so they won't miss any expenses and accidentally not write them down or miss it. And then you're always wondering if you should have had more. So use a system. If you're not going to use a system like that, you could always use Excel, list every payment you've made and spread it out into another column in the section, but you got to get everyone in. It's still not a double entry system. So I implore upon you all, you don't want to miss any expenses that we don't even know about. Okay, because you have everything in there, give it to the preparer, they can tell you what is and is not deductible. Entity choice. We don't have time to go over that, and that's not a deduction item, but I want you to know that this is a really important choice. When do I become an S Corp? Well, I think we accidentally moved. Here we go. When do we become an S Corp from a sole proprietor? When do I become a C Corp? Should I become a C Corp? What about an LLC? Does that save me anything? That's another webinar, but that's an important item, and I enclose for you in the presentation a quick guide to the pluses and minuses of entity choice. I also put in here the tax rates for 2020 and some key information about 2020. Don't worry if you can't write anything down. It'll be in for later. And I put information about autos because a lot of people like to buy an over 6,000 pound vehicle like an SUV and take a upfront deduction called Section 179 of about 25,000 bucks, 26,000 all at once in advance, where you can't do that with regular vehicles. That's a handy one. Okay, quick PPP. I would like to go through, because I'm sure it's on all your minds, is there's a new PPP portion act out, second round. And we want to talk about what I have on the screen is really for individuals. If you're claiming unemployment, there's the $300 add-on now. The stimulus check is $600 per taxpayer, including children. And there were several favorable, there's tax law changes for 2021, not for 20, like 100% of meals in restaurants are now deductible in 2021 and 22. So some of those things happen later on. Here's what I really wanted to go over for the PPP. So again, you'll get this. This is a email blast update that I give to my clients. And I took it and put it in the webinar. And here are the main things you need to know on the second PPP round. If your gross income in any quarter in 2020 was at least 25% less than it was in the same quarter in 2019, that's one of the qualifications. Another qualification is that you don't have over $2 million in PPP loans total. And there's a couple other qualifications that are not quite as hard to meet. Do you use the PPP money from before? Things like that. And do you need it? Or do you have access to other funds? And that was a rule for both PPP. So wherever you applied for the first one will be where you apply for the second one. Probably be a check the box application. You should look at the bank website to see when they're coming up. And I suspect that it will be in the next week or two that it'll be available. And this next two slides are the rest of my PPP email blast. We're not going to go over those portions now. Okay, I am ready, Asia Blue, for the next. This is a summary of what we went over today, and I'm ready to go over questions or anything else you'd like to share, Asia Blue. I'm looking at the questions. Anything else to share before I look at the questions, Asia Blue?
The only thing I have to say is that you make sure that you check your email, the spam part of your email, for our next invitation for our next webinar.
Okay, I'm reading the questions, and Martha asks, what if you cycle, can you do an equivalent? Maybe you're talking about triathlons. That's not a tax question, I think. Triathlon is swim, bike, run, and they have biathlons. They're just swim and bike, or bike and run. I think that was the question. I think there's a lot of questions on health and fitness from people. That's interesting. Okay.
I actually think she wrote that question when you were talking about automobile deduction.
Oh,
she was asking me.
I ride my bike to work. Can I deduct the bike? If that's while you're doing it, well, remember, if you ride it to work, that's a commuter cost, and technically commuting cost isn't deductible for anybody. If I work for another company and I drive to and from, that's not deductible. If I cycle to and from, it's not. Now, if I'm a sole proprietor and my home is my office and I cycle to places that I might do work, that mileage is deductible, and that would then make the cycle deductible. Health and fitness gyms, are they deduction? Well, maybe if you're Michael Bernstein and you use them as a marketing tool, maybe. But generally, no, is the answer. I was being funny there. Unless that's your business. Somehow that's integrated in the business you have. Or You might say, I'm required to keep fit for my job. Well, if my job is a tax preparer, the IRS isn't going to go for it. If my job is a fitness instructor, absolutely. Okay. What if I buy that large vehicle I want a Section 179 for? Let me see what the question is. In the last couple of days of the year. So I buy a $50,000 or $60,000 small truck or SUV on December 30th. That's a great question. Can I take all $25,900 all at once? The answer is yes, if the business miles divided by the total miles are a high enough percentage, because you have to be certainly over 50%. And I always like that mileage to be closer to 80 or 90% usage, because if you're not over 50, you can't take Section 179 at all. So it's a way at the end of the year, get a fast deduction, and then you depreciate the balance on out. How about health insurance for a sole proprietor? Very good question. Now, you wouldn't deduct that in your business return, your Schedule C. That's deducted as an adjustment to income on your personal return. And that's the insurance premiums, not the out-of-pocket costs. So the premiums. And you can't double deduct that and put it under medical. But why do we not want it under medical? We want it under adjustment to income because it's not subject to the 7.5% hurdle for medical, and it's not subject to itemizing in the standard deduction. So we get it before that. Now, what about the out-of-pocket expenses? What about those? Can I deduct those the same way as a self-employed person? No. No, and tax law almost always has an exception. So there is a Section 125 medical reimbursement plan program. And this is, people only usually do it if their medical, out-of-pocket medical is high, that they have to put out of their own pocket and they don't get it reimbursed from a business or something like that. So let's say I know every year due to allergies or something that's not covered by insurance, it's $15,000, $20,000 of medical expenses. As a sole proprietor, I can hire my spouse in a small wage, and I can cover her in a 125 medical plan. And I can cover all of her dependents, which means me and the children, if there are children. And then I can after those medical expenses are paid, the sole proprietor can reimburse those medical expenses, and then there are a deduction inside the Schedule C. Several of my clients do this when I recognize they had high medical every single year, and it was a great program. If it's not that high, doesn't happen every year, maybe look if you have a high deductible plan to go to an HSA program. Can I pay my child as a sole proprietor and not do it through payroll? No. If you did, you'd be paying them as an independent contractor. Where would you deduct it on your Schedule C? Because I want it under the wage line, employees. If you put it under commissions or independent contractor payments, first of all, it's not the right way to do it. And it probably might be disallowed in audit. Maybe you never get audited, so it's no big deal. But you're supposed to give the employee a W-2 or 1099. The W-2 you give a child has nothing on it but the gross, and it's not under $12,000. There's no tax, no filing. But a 1099, if the child gets non-employee compensation, they'll have to file, return, and pay Social Security Medicare tax. So they'd be subject to the 16% I was talking about. So you got to do the payroll. But there are very easy payroll programs to do these days that you can get it done. And if it's a sizable deduction, it's well worth paying an accountant to do that payroll. They're not that hard. I'm reading the question. Okay, the question is, in your experience, what kind of market research, you see it on the screen there, can apply in a tax return? I'm not exactly sure what you're talking about, market research. Let's see, hosted expedition, public visits, gather information. Pretty much everything you do to forward and get gross revenue for your business is a deductible item in some type or way, okay? For instance, let's talk about travel. People say, I'm gonna go to Europe and I have a business consulting on history, so I'm just gonna deduct the trip. Well, you gotta be very careful. There better be something there that you're seeing and visiting that you can't just read. You know, travel as a form of entertainment is not applied. So if you apply that to market research, if the market research is for your business, it's deductible. I need a little more specific information on that. I'm quite sure you're going to get some deduction, whether it be the travel or the actual cost of the market research, if it's online, things like that. Okay, we're coming up on about 40 minutes. We'll see if there's any other questions. While that's coming up, I'm going to talk about the Big Six. Now, the Big Six, the ebook I wrote, it has in it those 6 different chapters. And they talk about college planning and estate planning and tax planning, insurance planning, etc. You'll see them. And when you get the ebook, please read it over. It's only about 80 pages long. I made it very consumable, very fast, and targeting exactly the things you need to address. In the insurance section, I talk about the type of insurance you should be looking for. In the retirement plan, I give you a spreadsheet to model how you should be doing it, when you should be doing it, how you should be doing it. Yes, you're gonna have to roll up your sleeves. You're gonna have to go do the work. Your preparer, your professional will lead you to someone who can sell you the insurance and provide that information. Same with the estate planning, guide you to a lawyer. So this is a self-help book and gets you on the right track. You start now. It's never too late to start. Start whenever you can. The earlier, the better. And you'll see some chapters are more applicable to you than others. The point is read and make plans to start. They're difficult things to do. You're not alone if you haven't done most of the planning. Most clients that come into me new have not been introduced to it. Most preparers don't want to address these items because they're not revenue builders, but I think they're as important, if not more important, than the tax preparation itself. We know we're going to do the tax prep every year, but who's keeping track of you building wealth and making sure you can retire with a good retirement income? All right. Just going to see if we missed any other questions. I don't see any other questions. So Asia Blue, I'll leave it to you to tell us a few things about what they should look for after we're done.
Yeah, look in your email. We're going to be sending you this webinar and the ebook, and hope I'll also see you on YouTube in the comments.
Very good. And we'll have some upcoming webinars in the future. Keep track of those. And thank you so much for attending. It was nice to meet all your names on the side of my screen. Your faces were not available to me, and I wanted it that way. So you have anonymity. And you have a great day, and good luck this tax season. Okay. Take care. Have a good day. I think Asia Blue is going to
Yes, I will.
end the webinar now. Okay.